Good morning, ladies and gentlemen. I'm happy to welcome you back to this plenary room, and I hope that you had a relaxed trip back to your hotels last night after the dinner gala. So as for today, we're going to have this morning 2 parallel sessions, being one of them on Convergence of Non-bank and e-money providers and banks, which is going to take place in this plenary room. The other one on leadership and in-novation for SMEs finance is going to take place in rooms 4 and 5. So those who are interested in this theme, the leadership and innovation for SME finance, are welcome to join the parallel sessions, which is taking place in room 4 and 5. So for this session, I'm happy to call upon the moderator, Tamara Cook from FSD Kenya. So the floor is yours.
Thank you.
And take care of the rest. Thank you.
Thank you. Good morning. Is this working? Excellent. I'd like to ask the other panelists to come up onto the stage with me. So we're going to try to have a little bit of a conversation this morning. And I don't know how late all of you stayed out at the party last night, but we thought we would start with a little bit of something to wake you up. So if I could have the presentation up, we're going to ask a few questions to start with your electronic voting devices. Does everybody have one of these? And can I have the presentation up, please? And then I'm going to introduce the panel. So the first question is, who do you work for? Hopefully you haven't forgotten. Press 1 if you're from a central bank. Press 2 from a communications regulator, etc. We've got, I guess there's 15 seconds total. Is that right? Has everybody voted? How long does it go? Can we stop? I'm guessing it doesn't take so long. Well, this should be no surprise. We're at the Alliance for Financial Inclusion, that most of you are from central banks. We have no communications regulators, and I think I probably know who the M&O is in the room. All right, let's go to the next question. Do you have non-bank e-money issuers in your country? This is primarily a fancy way of saying mobile money, but do you have it? So yes, and they're big. Yes, but they're still pretty small. There's some coming, or no? Okay, so the majority do have, and they are operating at scale. Some are still in process, and then we've got about a quarter that don't have it at all. This is helpful for us as a panel to know who's in the room. And so if you don't have a non-bank e-money issuer at all in your country, then the regulatory issues that you're thinking about on this topic are different. All right, let's go to the next question. Do you have bank e-money issuers in your country? So are there banks who are doing some sort of a mobile deployment on their own? Again, yes, they're big. Yes, but they're small. They're in process. All right. So more people had bank e-money issuers than mobile. So that's interesting. All right, let's do one more question, and then I think maybe we've woken you up a little bit. Are there current banking products being rolled on top of e-money? So here, look at the choices. Yes, exclusively over e-money. So this would be a mobile-only account, for example. Yes, but only as an additional channel. They're in development, but they haven't launched, or no. And by banking products, we mean credit, savings, primarily. Interesting. So only a few have it as exclusively over e-money. Most have it as an additional channel, and then some are under development, some are not launched. Great. Well, hopefully you're a little bit awake. We'll stop the presentation for now and come back to it later. I'd like to introduce an excellent panel who will have a lot to say about these questions this morning. So first, we have two bank regulators with us, Stephen Wara from the Central Bank of Kenya on the very end. We also have Ala Malik Kazemi from the Bank of Bangladesh, Bangladesh Bank. In addition to that, we have one bank represented, which is Commercial Bank of Africa, Dennis Valemi. And they were invited because of their recent convergence-like product called Mshwari that operates over the M-Pesa platform in Kenya, and also Mpower, which operates over the M-Pesa platform in Tanzania. We also have all of the telcos in the world represented with Simone Di Castri. He is part of the Mobile Money for the Unbanked program at GSMA. And he wanted me to emphasize that not only does he represent MNOs, he represents financial service providers, because the majority of e-money issuers are offered by telcos. And then finally, not least at all, we have Sasha Pelverini from the Bill and Melinda Gates Foundation. And he's going to be representing not only the foundation, but some work that he's doing with telco regulators to help share the perspective of telco regulators and how that intersects with the perspective of banking regulators. So I'd like to well, first let me introduce myself briefly. So Tamara Cook, I'm from the Financial Sector Deepening of Kenya. And the reason I was invited to moderate this panel is because of a paper that I recently wrote with CGAP called How Mshwari Works, the Story So Far. Some of you may have seen it in the lobby. And the reason that we wrote this, CGAP actually approached us to write this with them because they were curious. There was so much global curiosity about this Mshwari product. And there was also a lot of misinformation. And so what Claudia and I did is we tried to pull together as many of the public sources that we could find and research that was happening around Mshwari to both describe what it is and what we're seeing so far. And I just want to pull out a couple of statistics to give you a flavor of the Mshwari product before we get started. So, and I'll leave Dennis to give more recent stats, but at the end of last year, they had 9.2 million accounts opened. They had 20.6 million loans that they had dispersed, totaling $277 million, entirely over the mobile channel at average sizes of $10 to $15. The deposit amount, so it's a savings and it's not just a credit product or a savings product, it's a combined product that is offered over the M-Pesa platform. It's part of the M-Pesa menu. There's been 1.5 billion deposited into that. The final thing that I wanted to share about the statistics is around the size of accounts. So one of the things that we thought was interesting is if you look at the average deposit size of all the accounts, it's about $5. But if you look at those that are active on a 30-day basis, the average is about $22. And so it shows you that those who are using the account more often are more likely to keep a higher balance, which is interesting. Some of the research that we've done on the Mshwari product was looking at poverty levels of customers who are using Mshwari. And similar to the trajectory that we saw with M-Pesa early on, initially it is wealthier people who use this product. But looking at some time series data, we see that Mshwari is following a similar pattern to M-Pesa in that poorer customers are using it a year in than we're using it at the beginning. And so if that trajectory continues, we'll see what happens. And then finally, one of the questions was talking about what are the loans used for? And they're used for a lot of things, primarily for just liquidity management for families. But 8% of the loans are used for health expenses. And Dennis could perhaps talk about a recent thing that they launched to address health needs called SemaDoc, which is a telemedicine program that includes a bit of an insurance component to give people hospital cash when they go to the hospital. All right, so that's the overview of Mshwari. I'd like to start with you, Dennis. Can you tell us a little bit about the Mshwari launch, and in particular, the regulatory issues, and how you engaged with regulators in that launch?
Okay, so
could we get this mic on?
So basically, we in Kenya consider the regulator, who's on this panel with me, a co-innovator. So basically, that means that without the Central Bank of Kenya, we would not have been able to launch Mshwari in Kenya. And we say co-innovators because they were not just involved in approving the product, they actually walked the journey with us to help us to handle some of the regulatory barriers that we would face to ensure that we launched. Okay? The first and most important critical success factor of Mshwari, which actually made it work, was KYC verification. Yeah? So basically, what the regulator in Kenya assisted us to do was not only to provide us a regulatory framework that we can use to do digital KYC verification, but they also introduced us to other government agencies that have this data already digitized. So in Kenya, we are quite lucky that we had a national ID system, which basically covers 99% of people in Kenya. And further to that, the government has gone ahead to digitize this database. So we had a means to onboard customers onto a banking service and perform KYC verification digitally. And today, the enrollment process onto Mshwari, which is a critical success factor, as I said, takes between 10 to 60 seconds for a customer to be active on the product. And in those 10 to 60 seconds, the customer has not only opted onto the service, but we've actually gone ahead to do KYC verification digitally and verified who this customer is before we create a customer record on our core banking system. So in that sense, we believe that the regulator really played a key role in helping us achieve this. Additionally, away from KYC, there are other regulatory matters regarding prudential guidelines, the definition of the products and pricing. They helped us walk the journey, advising us every step of the way in ensuring that we were doing on the project the things that we needed to do to ensure that the product gets approval. Yeah? And at the launch, the guest of honor at the launch of the service was actually the then Central Bank Governor of Kenya. So that just shows you that the importance of the regulator in the whole process of creating these services.
And can you just explain a little bit about what that engagement looked like? You know, was it formal letters? Was it conversations? How did you engage, and at what point during your product development process did you start engaging with the regulator?
Yeah, so basically we started engaging with them 12 months before we even launched the service. And the engagement was both formal and informal. Formal in the sense that we, of course, wrote to them and explained to them the intention that we had, the partnership we had with Safaricom, the telco, and what we wanted to do. And we continued to keep them updated every single month on the status of the project, and basically briefing them and showing them the progress we had made and the challenges we were facing. So we had monthly engagements with them. And pre-launch, they gave us a pre-launch checklist on the things that they would come to audit the platform and the service end-to-end to ensure that all the boxes were ticked. And then even during the pilot, because we did a 3-week pilot with the bank and telco staff before we launched the service, we even had some members of the central bank on the pilot with us for them to experience what we were about to launch. Yeah, so that is the nature of the engagement that we had.
Great. Stephen, let's hear your side of the story. And not just on Mshwari, because you've been involved with many different products that have been launched over a non-banking money platform. Can you talk about Mshwari, but maybe some of the others, and what the engagement was like?
Thank you. First of all, good morning. I realize that the hall is full, and I was hoping we were going to speak to very few people, but now I'm surprised you are all here. Thank you for coming. The first thing I would want to join with my colleague from Commercial Bank of Africa, and this was said yesterday by my governor, creating an enabling environment is a very important word, because I want to first of all say that the central bank as an institution and as a regulator has continuously created an enabling environment for us to innovate regulation. And in yesterday's meeting, when we were looking at the relationship between the private sector and the regulators, we observed the importance of innovation. My governor did observe that we need to talk about innovation from the side of the providers, that is the banks or the telcos. But I want to underscore the fact that the difference that has happened in Kenya is that we also have been given an enabling environment to innovate regulation. Having said this, we all know that the M-Pesa product, many may think that it came in as something which was very, very planned, but it's not really the case. I would want to say that it was a telco approaching a central bank and asking a central bank to authorize them to do payment services. That was the beginning. And the central bank realized that the telco can do payment services. And we realized from the very beginning with the telco regulator to see how a telco can offer basic payment services. But from the word go, the beginning relationship was hostility from the commercial banking industry. Let me underscore that word again, hostility from the banking industry, because they thought the telco was coming in to compete. But the telco was coming to complement banking, because banking has a lot to do with payments. Therefore, when we authorized M-Pesa, banks at the very beginning were relatively hostile, but over time, they started looking for opportunities to leverage on this platform. So the leveraging with this platform is where banks started now mobilizing for deposits. And the banks now began to warm up. They started using the platform for payment of their loans. They started realizing, after all, this product can actually lower transaction costs for our business. And I can now say all the other commercial banks in Kenya do use mobile money, it be from Safaricom or from the others, to do their banking. Right. So the relationship now warmed up, and I can say by the time CBA is approaching us, Commercial Bank of Africa, if I may, started in the 1960s. And by the time they are coming to us, they have done banking for over 20 years. No, from 1960. 50 years, and they had not reached 100 customers, 100,000 customers. 50 years of banking, you have not reached 100,000 customers. Why? Because you cater for the small population. Commercial Bank of Africa is asking us to allow them now to offer banking services to the many using this platform. So when you ask me where we again sat down to think about regulation, we said, yes, offering credit is not the mandate of a telco. Safaricom cannot offer credit, and for that reason, when a commercial bank came to us saying we want to offer credit through this system, we were more than happy. And that is how, when we were looking at the regulatory issues, we were saying, if a commercial bank can offer credit through this platform, we'll then have made a real success with regard to offering what you could call mobile banking. May I now summarize by saying, how many millions are you doing now? How many customers do you have?
11.6 million.
11?
11.6 million customers.
6 million. So this is a game changer. And not only did we then deal with the Commercial Bank of Africa, I could tell you now in the central bank, all the other banks now want to offer a similar service. KCB has come on board, and Cooperative has come on board, and I can bet you, and I've been saying this, within less than a year, we may have all the banks now offering a similar product, And now we begin to look at a new set of regulations. Thank you.
Thank you. Great. I want to turn to telcos, but before we do, I want to highlight one of the questions. If we could get the survey back up that Dennis talked about. He talked about the importance of something that's called the IPRS in Kenya, the Integrated Population Registration Service for IDs. Can we get the questions up? I think it's question number 5, I'm not sure, or 6. What I'm curious about is whether or not you have national IDs in your country that are pervasive. So yes, and they can be verified through a database such as the one Dennis talked about. Yes, but there's no way to verify them digitally. They're just kind of cards around. Yes, but very few people have them. They're in process or no. So please vote. And while you're doing that, while we're waiting for that to tally, Dennis, maybe you could talk about the difficulty you found going into Tanzania that didn't have this service.
Yes. So naturally, offering a digital banking service without a digitized KYC verification platform, in this case national IDs, is very difficult. But that didn't stop us from attempting to do that in Tanzania because we believed that the market dynamics that exist in Kenya are the same in Tanzania. The only challenge is that in Tanzania, if there are any people here, one, they just recently launched national IDs, so a very small population of people there actually have IDs. And in addition to that, even the few people that have IDs, the platform is not digitized. So when we went to Tanzania to launch the service, that was one of the challenges that we had to resolve. And yes, we did come up with workarounds to try and address that problem by basically relying on the telco collected KYC information, because the telco in Tanzania, Vodacom that is, they have digitized the identification documents that customers who come to register on mobile money come with, and we relied on that to offer the service. But it was very difficult for our credit management team to actually offer reasonable ticket sizes for credit because of that problem. So that has really hampered the growth of the service in Tanzania. Yes, the service continues to grow, and we have investment now from FSD and Bill and Melinda Gates to help us transition the service there to mature. But the key message here is that having a national ID system and digitizing it to enable financial institutions or DFS providers to have a repository against which they can digitally verify customers and therefore activate them onto services of this nature is a critical success factor that you must address in your markets and countries for you to have these services working.
So we can see from the results that less than half of you have such a database. A quarter of you have IDs, but there's no way to digitally verify them. And while IDs are not the remit of the central bank, which is what most of the people in this room are, it's interesting to look at what are the policy issues that surround digital financial services that impact it. I'd like to turn to looking at the telco perspective now. And Simone represents 800 telcos all around the world through the GSMA and his role in the mobile money for the unbanked program. And when we first started talking about this panel, let me tell you honestly, he didn't like the title. He said, what does this mean, convergence? And so I'd like to ask you to talk about what it does mean to you and where you're seeing it around the world.
Good morning. Thanks, Tamara, from the question, and also thanks to AF and its member for inviting me to participate in this panel. It made me think this title, Convergence of Business Models, because the example of Mshwari, for me, is an example of a very successful partnership. It's not where two different business models are converging. And there are similar examples. There is, for example, in March 2015, Safaricom and KCB launched a similar product. It's an opportunity for people to store money in the KCB bank account, transfer it from an M-Pesa wallet, and to obtain a loan for up to 6 months with a actually an higher amount than the one that is allowed by Mshwari. And this product has been also very successful. I think they have registered already 1 million customers in 6 months. This is happening also in other countries. We have the example of Timiza offered by Airtel in Tanzania. And it's important because we are recognizing the differences and the fact that we can leverage different assets and different expertise between banks and MNOs. In these cases, the most important asset that the MNOs are bringing is probably all the information that they have about the customers and the opportunity to do some credit scoring using this information. An important asset and expertise of the banks is that they are credit providers. They really know how to design a credit product, and on the side of transparency, on the side of like how to do market conduct where you're offering such product is important. So these are all partnerships because MNOs are not going to become banks in the future. MNOs, I don't think, are interested in becoming intermediaries and to occupy this space. There will be more and more and more of these partnerships that are fundamental to increase financial inclusion. Convergence of business models. Where is this happening? Where are MNOs and banks using the same features? I think the most important one that we have seen in the past years is that we have recognized that these financial institutions need to use leveraging mobile phones, the ubiquity of mobile phones, and distribution networks through agents. So at a very high level, we see that MNOs and banks are applying pretty much the same way to increase their outreach toward clients in the cities, but also in particular in the rural areas. If we go more into detail, I think there are 4 points where we see convergence increasing between the e-money, non-bank-led models and the bank-led models. So the first one is, and we saw from that slide, the need to design the tiered account opening. So to give the opportunity in those countries where there is no universal ID for clients to use different identification proof documents in order to access accounts with different features and with different transaction limits. The second one, I think both banks and mobile network operators that are e-money issuers understand the importance of remote account opening and leveraging existing information. So for example, for non-bank e-money issuers, it's fundamental to be able to use the information that has been stored at the moment of the registration of the SIM card in order to activate mobile money wallets. This means that customers don't need to re-register, reproduce some copies of the documents, and they can activate the mobile money accounts from their mobile phones, which is what happens for Mshwari, and that's been, I think, the biggest revolution that Mshwari has brought in Kenya. The third one is, and still this is quite a niche feature, is the pass-through deposit insurance. So where mobile money accounts start being covered by deposit insurance, I think it's an important step in terms of customer protection. And then finally, I think this is the most important probably innovation that we have seen in the space of financial inclusion in the past years. And it's the opportunity for e-money issuers to distribute the interest that is accrued in the pooled account. So in February last year, Governor Ndulu in Tanzania authorized the telecommunications e-money providers to give back to the customers all the interest that the pooled account had accrued. And you understand that this is something that was not allowed before and can be very interesting because it can bring different behaviors from customers in terms of understanding the potential of mobile money wallets also to store money and changing the savings behavior. So at that moment, we recognize the importance of this innovation, and actually, we see that the customer behavior is changing. Data from Millicom are proving that the amounts deposited in the e-money wallets since there has been the redistribution has increased by 51%. So people are starting really to use this as a saving account, which I mean, in my opinion, creates a fundamental pathway toward financial inclusion. Because if I can store money in my mobile money mobile money wallet, I am still subject to transaction limits, but also to a maximum balance limit. Once I have reached the balance limit, but I have learned to save, I have learned that I can use this money, storing it there instead of cashing out, and this money gets remunerated, then probably I will need to graduate toward a bank account. I will become a banking client. And so I think it's important in terms of graduating customers from informal to semi-formal to the formal financial sector.
Thank you, Simone. I'll be interested to hear the regulators' reactions to those thoughts, but first I want to turn to the telco regulator perspective from Sasha. Can you tell us a little bit about the work you're doing with ITU and what the role of the telco regulator is in this, in this topic?
Okay. Thank you, Tamara. Good morning, everybody. Before jumping on the ITU, I'd like just to comment on what just Simone said. I didn't like the title either of the session, Convergence.
You didn't like the title
either. I didn't like the title either. And
I should ask you to vote on that one.
We should vote on the title. And it's not because I'm Italian like Simone. It's just because I think that product like Enrollment are more, again, a partnership and a cooperation. So the convergence for me is really when you have products and services that are offered by non-traditional players. So when the MNOs enter the payment space, and it will be interesting to see from the audience and the panel, what do they think will be the evolution of this convergence? Whether there will be convergence beyond payment into insurance, savings, and loans, or whether the distinction between traditional players, banks, and telcos, and non-bank institutions will remain more radical when we enter the M-Shwari type of product, where the telco will become more a vehicle rather than a conceptual, substantial contributor to the product design itself. Having said that, ITU, I have a double hat here because I'm representing the Bill and Melinda Gates Foundation. I'm part of the Financial Services for the Poor program, which is an initiative that the foundation launched in 2006 to promote access to finance for the 2 billion people now, according to the latest Findex data, around the world living with less than $2 per day. On the other hand, I have another hat, which is the chairman of the Focus Group on Digital Financial Services, which we launched together with the International Telecommunication Union last year. The ITU is the oldest UN agency in the UN family. It's 150 years old. It started as the Post and Telegraph Association and then evolved, and in 1947 became part of the UN agency. And they, similarly to AFI, represent telco regulators and communication authorities from around the world. It's a very interesting mix. It's a public-private partnership because they have 193 member states and 700 representatives from the private sector and academia. So the various Alcatel, Lucent Technology, Microsoft, Facebook, et cetera, et cetera. So my role in the Financial Services for the Poor program is really looking at policy and regulation. And this is what we talk about here. This is why AFI has been also created in 2008, because we understand how policy and regulation can be instrumental to creating an enabling environment for innovation, competition, and for digital financial services to reach the poor, which is our theory of change at the Gates Foundation. We think that leveraging an infrastructure that exists today, all these billions of mobile phones, could really allow us to reach the poor in a much more scalable, sustainable, and faster way than traditional brick-and-mortar services. When I look at policy and regulation, and when we think about mobile network operators particularly, and we think about the digital qualification of digital financial services, we have been traditionally also at the Gates Foundation looking at the financial services piece of the definition without really paying much attention to the digital element of that. And financial services means engaging a lot with you guys, so with Ministry of Finance and Central Bank, because they are the lead regulators. You are the lead regulators for financial services. But what about digital? What are the implications that emerge from a channel that is very powerful and the fact that you have mobile network operators and hybrid entities entering this space? So last year, we decided to start discussing and cooperating with the International Telecommunication Union because they bring a wealth of expertise in a number of areas that might be really critical also for the development of digital financial services in developing countries. They are increasingly looking at how to apply information and communication technology to development, not just financial services for the poor, but also education, agriculture, health, women. So there's a number of work streams there. So the idea is, how can we bring together financial services regulators and telecommunication authorities to get together and think what are their roles and responsibilities to enable a digital financial services ecosystem to develop. And although the starting point, as I said, is not questioning the leadership of the central bank in regulating a financial product, the question is we need to start a collaborative exercise. So there are more regulators, more government departments that needs to be engaged, the tax authorities at some point, the Ministry of Interior at some point, the Ministry of Agriculture. So we just started short and small with the telecommunication authorities. So we thought that there are some gray areas in between, which really require collaboration and dialogue. And although most of the countries have some sort of structured dialogue, in many others, it doesn't really happen. And one of the first questions that you ask, how many communication regulators in the room? 0. And if you go to the Global Symposium for Regulators that the ITU organizes every year, which gets together all the communication authorities, how many financial services regulators in the room? 0. So there's no dialogue, at least at international level, some dialogue at national level. And so the idea is, how do we raise awareness, particularly with telco regulators, about the role that digital financial services can bring to promote financial inclusion. So what are the areas that we think are gray? Well, certainly there are all the areas and issues related to the infrastructure. And I was very interested yesterday, for those who were at the session on merchant, I was interested in the comment that the gentleman from Thumb Up made, in terms of like what is critical for you now for your business to grow. Is like, I need broadband access. I need telecommunication regulators to pass legislation to allow broadband to be deployed in an affordable way. And I was really surprised by that comment. I said, wow, this is really, proving that it's important to have this dialogue between telecommunication regulators and financial regulators. Consumer protection is one of the issues, because your mobile phone is at the same time your device to communicate with the world. And on the other hand is your device to transfer money to your friends and receive money. So that device have different multiple functionalities. And therefore, there's a lot of unclarity. I mean, I heard communication authorities in various countries, we receive a lot of calls for people complaining about the payment product, and the central bank receiving calls because the voice telephone is not working. And so people don't know where really they need to go. Sure. The quality of the service is also another big issue that is not very much covered in any major fora, but how many hours of average downtime you have in any given developing country, like 40 hours, 50 hours, 60 hours. So the communication drops. And the assumption is, if you are calling your friend or your family and the communication fails, well, you call back, no big issue. But what happens if you are transferring money? That creates a great deal of uncertainty and insecurity. And we know that trust and confidence in the system is paramount importance to get usage. If people don't trust the infrastructure, they will never use it. And I think that, and Kate McKee from CGAP can confirm that, I saw her in the room, the number one deterrent for customer usage is really the signal. The fact that the coverage is not guaranteed everywhere. And if we think about financial inclusion in rural areas, that's a big deal. So what's the role for the telecommunication regulators to make sure that the infrastructure is reliable? And then, of course, there's privacy, and then there's other issues like in between, like interoperability, whether you have technical issues and business issues and regulation and rules. So we're looking at all these areas and try to understand what are the roles and responsibilities for each category of regulators to work together and get to the best, most efficient solutions.
Thank you, Sasha. So let's turn to our last panelist. Kazemi, can you tell us a little bit about what convergence looks like in Bangladesh, which has a different model than the models we've been discussing so far? Perhaps use Sasha's.
Good morning, everybody. Like Sasha and Simone, I was also in a bit of confusion about what convergence exactly means in this context. So I took it to mean some kind of synergistic partnership between parties that can give us the optimal results. So our efforts, enablement efforts are aimed just at that. We have to begin with, from the very beginning, we have been very hands-on in creating enabling environment for development of mobile financial services. We have led a major modernization of our payment system and the entire financial sector IT infrastructure, which has enabled very fast growth of mobile financing, mobile phone financial services, online financial services, e-commerce, card-based services, and so forth. We are also looking at regulatory enablement. We have our mobile payments regulations, which seek not to restrict, but rather to help companies grow in their, help and support them grow further. Then there is one major interoperability issue that is always raised, because you have a number of operators, each issuing his own kind of e-money. So we are trying to get around this problem by commissioning a national payment switch under our own arrangement in Bangladesh Bank. So that has already begun working. The other major issue there is KYC facilitation. In that too, we have worked in a very hands-on way. We have worked with the National Election Commission, which has the national database. It used to be simply printed cards. Now they have finalized arrangements for issuance of NID, electronic cards, smart NIDs. And we have already got into arrangement, got banks into arrangement with the Election Commission to use this database, banks and mobile phone platforms also, all of them, to use this database to verify the KYCs. And
Thank you.
on, let me add a little more on the other things that we are trying to achieve. So now, in our regulations, we have left participation open for MNOs as well in these platforms. But to begin with, these have developed mostly with bank participation. And our requirement has been to make it bank-led. Bank-led because we want not just payment services, we want banking services, insurance services, all other kinds of services delivered through this medium. So that's why, and when it comes to question of deposit taking, our view has been that if they work in partnership with banks, they can perform, the mobile phone companies can perform the payment part of the service very efficiently, because their delivery agents are being used by all mobile financial service platforms in Bangladesh as delivery outlets. So this is already a kind of partnership going on with this.
Sure.
And then we are looking forward to mobile phone companies bringing in customers, and they are maturing, and because the banks will be the leaders, so banks will be inducting them to have bank accounts with full banking KYC for the banking services, like lending and all other kinds of things.
Great.
And this agent and principal relationship between, in this they will act as agents of banks, these mobile phone platforms. So this will simplify a lot our regulatory owners, because we know how to regulate banks, and we have the telco regulator which sees to the smooth functioning of the telecom operators, MNOs. And we are in actually continuous close dialogue with them. So as Shasha said, maybe there is no dialogue at the international level, but at least at our domestic level, we have maintained it. So we have uploaded in our website a revised draft of our mobile banking regulations, which seeks to encourage non-bank participants, including the MNOs, into these platforms. Now we have already too many platforms. So we want at this moment to have multiple banks joining together in some more viable sized entities, so that maybe 3 or 4 large operators work in a competitive manner.
Great. Stephen, I'm interested to hear what you think about some of the topics that both Sasha and Simone raised related to telco regulators. Can you pass the microphone? Thank you, sorry.
First and foremost, I like the last communication from Bangladesh. There is a big mistake if we assume that access to payment services per se is going to be equal to access to finance. So from the beginning, I want to even indicate, making it even a bit more dramatic, we cannot mistake access to hospitals with access to health. Yes, you can bring somebody up to the door of a clinic. And one still, when we talk about agents, mobile agents are to me a clinic. You cannot access a clinic and then start saying you have access to health. You have to access a hospital where there are doctors. You have to access, so when I look at finance and health, I want to begin to say, our goal has always been, and this is why I would react to such a, my friend, and say, the game that was there before mobiles came was a game which was purely banking. And we central bankers only knew how to regulate banks. The rules of the game have now changed to include both a telco and a bank. And like Sacha is saying, there is a debate at maybe the national level, but it's still at a very early stage as to how you are going to evolve a new way of regulating this type of products. In this case, when the telco brings you into payments, we still should take you back to banking. And it is in banking that you get banking services. And for that reason, once you get to banking, like we said, when Safaricom came together with CBA, we spent a bit of time emphasizing that credit is a mandate of banks. They are the only ones who have the skills and the tools to deal with banking. And this is just one of the products that banks can offer. So what we are seeing now in the way of convergence is that the telco will bring you up to the door of the bank, and the bank will begin to offer you banking services. Banking services not offered in the traditional way, but banking services offered in a new way. And therefore, the rules of the game, and that's where the debate begins, the rules of the game, both for the regulators and for the regulated, will have to change. And therefore, one of the things that I'm seeing is that we now need to sit together, whether at national level or at international level, and come up with the new rules that will govern this new game. Because it's now being played by very different parties. So when I look at the statistics we want to parade, you can see we have 80% access to finance. But that does not mean that accessing payments is really accessing finance. You begin to access finance when you go into Commercial Bank of Africa, Equity Bank, and the rest, and begin to get banking services. And this is why the whole topic about payment of interests, I may want to say we had that issue from very, very far. But we always tended to want to stay away from making the telco product pay interest because we feared, and I still think that as a policy, we still think that that is a very important area to study. We still feared for the telco to start paying interest to the point where the customers now begin to put money in the payment platform and have no appetite to put it in the banks. So the quicker the money gets into the banks, the better for us. And in policy, this is why I would wish, as quickly as possible, we educate everybody. You don't need to keep money in your payment platform. Push it to your bank where you can get banking services, including interest. So if the banks who are the ones who are paying interest, would be that happy. Because at that stage, you are encouraging people to participate in what we can call mobile banking vis-a-vis mobile payments. And this is exactly where the debate now goes, as to whether we encourage them to do mobile banking or we want them to just do mobile payments. In this regard, I think we do talk a bit with my colleagues and when we are here, we will be receiving more, but we can tell you that our interest is to get money back to the banking stream as quickly as possible, where they can get banking services. Thank you.
So we're hearing some divergent views. I'd like us to turn to the survey again, if we could get the next question up. Because what I'd like to, so we've talked a little bit about the savings and the potential of where that savings should sit, where the interest should go. But I want us to talk about credit a little bit. So the next question was, does credit information sharing work in your country? Yes, it is operating at scale. Yes, but few credit providers provide, report, or access it. And it's in process or no. And while you're doing that, I just want to highlight this UFI note, which I just picked up at this conference, some of you may have as well, talking about digitally delivered credit, policy guidance note, and results from a regulatory survey. And as we think about the regulatory issues around providing digital products over e-money platforms, I think it's interesting to consider what are the other regulatory barriers or enablers to being able to do that. Hopefully we can get the results up soon. But in Kenya, there is credit information sharing is, okay, so good. We have more than half have it, and it is operating at scale. Yes, but few credit providers report on it. It's in process or no. And one of the reasons why, there's two reasons I think this is important for these kinds of products. One is that it enables credit providers to be able to check the credit information sharing service to find out whether or not someone has a credit history. But two, and more from a financial inclusion angle, I think it's incredibly important for people to be able to earn credit for the credit that they've borrowed and paid back well. And so, for example, with the Mshwari platform, we've got people who are accessing loans many times for the first time at very small levels. And if that information, that positive information is reported to the credit bureaus, that gives them credence with other lenders. It also helps to prevent something which I think we all need to be thinking about, which is over-indebtedness. If you can find out if people have multiple loans, and thinking about it more from a market conduct angle. Could we go to the next question? So in this survey, it highlights several issues that have been highlighted around digital credit, many of which are related to consumer protection. Please pick which of these you think are an important, or maybe, I don't know if you can pick more than one. If you pick your first one first, and you can, no, you cannot. So you have to pick whichever one you think is the most important. And these are, limited KYC, which we heard Dennis and others talking about, high interest rates and fees, which we haven't talked about, but this note compares the interest rates. Currently, because of the risk, credit providers have been charging relatively high rates for these short-term loans delivered over these platforms. They're relatively low terms and amounts, limited disclosure of terms and conditions. For example, on Mshwari, you have to accept the terms and conditions, but the only way to access them is on the internet. And unless you've got a smartphone, you're not able to actually access those terms and conditions. Although I imagine many of us are guilty of checking all when we see that terms and condition box on the internet anyway. Lack of guarantees. Can we get the results? Interesting. So Dennis, I think you've made a compelling case that limited KYC is a barrier. I think it's interesting to think about. Does anybody, Kazemi, would you like to respond to this or any of the other things that have been said?
I would like to echo the concerns expressed by our Kenyan regulator. I entirely agree with all his concerns. And that is exactly why we are trying to develop a partnership in which banks play the role in deposit taking, covered by deposit insurance, and in lending. The digital platform itself doesn't do any lending. And this structure would enable to ensure that the digital platform maintains minimal transaction balances in the platform for individual mobile financial service customers. Anything beyond a certain level goes to banks, to regulated deposit-taking banks. So that ensures that they are each in place of their own efficiency and their own competence. Thank you.
Simone, did you want to say something? I saw him tapping his
I was
mic.
thinking, I think we really need to understand customers, so how customers behave and what they want and how they are changing their state of mind and their behaviors with digital financial inclusion. And I think one of the most meaningful data regarding credit comes actually from Kenya, where, correct me if I'm wrong, Stephen, but the default rate of digital credit is lower than the traditional credit. So we were so concerned at the beginning about digital products. Customers will just receive requests on their phones. It's so easy just to say, yes, I want some easy credit, get quickly the availability of those funds, and then they will default. But actually, we see the customers are understanding what products they're going to use, and they have the right incentives to pay back, because it really matters to them to be able to access to a new credit. It really matters for them that their mobile money account is not frozen. So let's look at the customers. And I would say it's the same thing for the interest. We are confronting innovations. We are seeing new things happening in some markets. Let's try to study what's the impact of these innovations on the customers and how they are responding. And the role of the regulators, of the AFI members, is fundamental, because you have the responsibility and the power really to encourage innovation, to empower the innovators, providing them a stable regulatory environment to make the right investments, but also the space to test new products, to test solutions on a smaller scale and then on a broader scale. I think it's very important, because otherwise we risk to slow down and we risk to lose an incredible opportunity that we have today.
Dennis, could you respond to the credit information sharing? When CBA first started reporting to the bureaus, there was a bit of press, not necessarily positive. And you've had some issues with that. Maybe you could talk a little bit about that, and then Sasha, I'll go to you.
Yeah, so naturally, initially, we were a bit hesitant to share, because we believed that we as market leaders, we had invested a lot and put in a lot, and sharing the information would provide our competitors in the market a free hand to use the information to create businesses that they didn't. But we started sharing now, and that information is currently available. But we also found that sharing has helped compliance rates for our customers, because once you start educating customers and explain to them that if they default, they'll be reported to the CRB, and once they're reported, then they can't access credit with any other bank or any other institution, then it has helped now to promote compliance rates. The other regulatory probably concern that you raised when you started the conversation around over-indebtedness, I think is probably the new challenge that we need to address with our regulator in Kenya, because of the copycats that are already existing in our market. Because we, as Stephen said, all the banks will shortly be offering the same service in Kenya. So I think the challenge will be to ensure that customers are not taking more microcredit from different institutions that they can actually manage to pay. So ensuring that you're not just checking behavior with the CRB, but you're checking whether an existing customer who's currently asking for a digital loan, whether they have other facilities elsewhere or not, will probably help to ensure that the people we are trying to help by giving this credit do not become over-indebted. So that's the new challenge that I see.
Sasha?
Yes, I know we're running out of time. It would be actually nice to have some reaction from the audience. But one question, if I can just jump in your role and ask a question to the regulators. With the convergence and the fact that we have players from different sectors offering products and services of another sector, we're talking a lot about functional legislation. So the fact that product looking similar or acting similar or having the similar economic effect should be regulated according to the same or similar rules, rather than looking at the institution offering them. So I'd like to have some reaction from Kenya and Bangladesh on how they see the challenge of, you know, finding their way and regulating proportionally these products.
If we have any burning questions, we have 2 minutes. Go ahead,
Okay,
Stephen.
very quickly. From the very beginning, we worked very closely with our telco regulator. And it's only now we are formalizing the relationship through an MOU. But more important, in fact, more important, our National Payment Systems Act and our National Payment Systems regulations have made it very clear who regulates mobile money, or so-called e-money. And that clarity was missing because it cannot again be handled, you cannot handle it for very long without a legal instrument that governs that relationship. So the mandates of the Communication Authority and the mandates of the central bank are much clearer in our legal instruments. And I think going forward, and this is a relationship such as is proposing here, we may sit again with the telco regulator to understand again where do we draw the lines and how do we write it into regulation or into law. Because one of the things markets hate, one of the things private sector hates is uncertainty with regard to legal instruments. And although we operated it for a long time without legal certainty, you cannot go very far. Investors cannot invest very well if the certainty is missing. So what we are really going to do, and I could say this, we are again going to look at the laws with the support of our two leadership in the telco and in the central bank to agree on exactly what roles do you carry. So today, if you ask anybody in Kenya who regulates mobile money, if you ask CBA, they know it is central bank. If you ask any telco who regulates mobile money, it is central bank. That clarity is there. So on that score, I would say that we need again to sharpen the legal instruments. Thank you.
So I've gotten the time's up, so I'm really sorry. You're going to have to address people in the coffee break for your questions. I'll just give, we have 2 minutes for just any other last quick remarks. Stephen, you've had yours. Maybe Sasha, you've had yours. Kazami, do you want to say a sentence in closing?
I think Sasha has,
It's okay. I think it's working.
Sasha has raised an important point that if a service is delivered by two kinds of providers, they should be in the level playing field. Now, this kind of, we are trying to avoid this kind of conflict just by using the mobile networks as agents of, and the mobile platforms as agents of banks. And the problem that Kenya mentions arises because they started with a MNO-led model, and we started with a bank-led model. So different things can be appropriate at different stages of development.
Thank you.
So these things can be sorted out, I think. Thank you.
Dennis, Simone, any last comments? No? Okay, great. Well, our objective this morning was really to give you something to think about. We don't have the answers. We have some diverging views, maybe some converging views as well. And I think this is an emerging area where we're going to see hopefully a lot of innovation. And the reason I get excited about that is because I think it extends the possibility frontier of the kinds of services that we can provide people who have been excluded from the financial sector. Please join me in thanking this panel.